Hey everyone, this is Rob Keens of GoldSilverPros.com. I have a first-time guest on the program, a very special guest, John Adams of Adams Economics. John, how are you doing today?
I'm doing well, Rob. Thank you for having me.
I'm so excited to have you on the program. I've been following your work for quite a long time. I've watched you on your local show there in Australia, and then I've seen you do interviews across the world now. And you have such fantastic content following what's going on in the Australian market and then following what's going on at a macro level. So I actually wanted to start at the macro level because I think this is kind of the forgotten topic in the precious metals industry. We're focused on SilverSqueeze and all these things. But the core reasons why we're in the precious metals, the issues we have with the debt, the problems with the fiat currencies. So let's start there. What are you seeing on the macro level right now?
Sure. So yeah, I mean, when I sort of started my journey being a public commentator here in Australia, the biggest concern I have in the Australian context is we have the biggest debt bubble in Australian history. At the same time, we've got the biggest debt bubble in the history of the world. So maybe for some Americans, they wouldn't be aware. So Americans would be aware of the amount of debt, household debt Americans had before the global financial crisis in terms of real estate. Well, Australia's household debt bubble at the moment, it's the second biggest in the world relative to GDP. Australians are obsessed with property. We've taken on huge mortgages, high six-figure, high seven-figure mortgages. We've had a government and a central bank and a banking regulator that has made every concession that would allow people to get into ever more debt. And anytime we've had a point of crisis, for example, COVID-19, our government has tried to rescue the debt bubble by pumping ever more money into the financial system. So, back in, say, in 1918, 1919 with the Spanish flu, well, we didn't have a stimulus package when Australia went through that situation. And yet in 2020, we had the biggest stimulus package in Australian history. And the question is, well, why? And basically, they're trying to defend this debt bubble. And right around the world, in terms of last year, we saw record amounts of fiscal and monetary stimulus and obviously easing of a whole bunch of standards for banks in terms of lending. And what was this all about? This was not about a public health crisis. It was all about trying to stop this debt bubble from imploding. And one of the popular deflationists who have made the rounds, both in book form but also in terms of YouTube and television interviews, is Harry Dent. And I've interviewed Harry. He was in Sydney in 2018. I had the chance to sit down with him and have an interview. And it has been a very interesting intellectual journey on this inflation-deflation question. I wrote an article in 2018 for news.com.au, and it was about the 6 pathways to Australia's economic Armageddon. So if any of your viewers Google John Adams economic Armageddon, you're going to find a whole host of articles I've written about this. And the premise is that once you have a debt bubble of this magnitude, economic history says that you will not you can't resolve this in a very mild and peaceful way. It's going to be some sort of violent economic crisis, whether it's a deflation crisis or an inflation crisis. And so as I've traveled along this journey, you've got your inflationists like Peter Schiff, who I've listened to quite a bit over the last decade, and then you have your famous deflationists like Harry Dent. And one of the key things that I really want to pinpoint with Harry is that I wanted to really test his assumptions when we did this interview. And because after the GFC, central banks around the world printed about $15, $16 trillion. And that was enough with the QE to stop the financial crisis of 2008, and that resulting in the biggest depression since the Great Depression. Mm-hmm. And so, particularly in the US context, that's why they call it the Great Recession, not the Great Depression, because the stimulus basically, tried to keep the show on the road. Now, basically, what I said to Harry was, well, we will reach a point of crisis at some point in the future, and who's going to stop the central banks from printing ever more money? Because during this conversation, he said, well, if we printed $15, $16 trillion after 2008, the next crisis could be 50 trillion. It could be 100 trillion. I mean, we don't know what the number is going to be, but his assumption has always been there's a limitation to what the central banks can do.
Mm.
There'll be either the market forces, or there'll be political pressure, or there'll be someone to stop the central banks from printing all this money. And that limitation will basically mean that they can't rescue the debt bubble. And that's why we're going to have the biggest deflationary collapse in world history. And so that was 2018. We had that conversation, and I have to say, Rob, I was very open to the deflation argument before we had the conversation, but then by the end of it, I actually walked away less convinced by Harry's arguments, because I thought to myself, well, no one's going to stop the central banks. I mean, they have all the power. And I'm just trying to think of myself from a political point of view. I used to work in federal parliament as an economic advisor to an Australian senator. So I'm not just sort of looking, I'm an economist, but I've also been heavily involved in politics as well. So I tend to think both in financial market terms, but also in political terms. And I think from a political point of view, well, who's going to stop these central bankers? And so far, what we've been able to see in the last 12 months, there is no limitation to central bank power. When in March 2020 they came out and said QE to infinity, and they printed everything that they needed to keep the debt bubble going, and the debt bubble surged, and obviously where they are getting more and more desperate in terms of their macroeconomic settings. Systemic risk has gone through the roof, and obviously that's where I think the precious metals conversation really comes into fore, because there is a price suppression scheme. It's been running in the context of the COMEX. I mean, WikiLeaks released a document that was the whole purpose of the COMEX, to generate volatility, to dampen demand, and that's been running since 1974-75. Part of the suppression scheme has been this issue of these synthetic products, these unallocated, pool allocated accounts in some of these ETFs, and these are diversionary tactics to make people not actually demand physical ounces of gold and silver. But the macro picture is that if the suppression scheme of gold and silver were to collapse and gold and silver were to go through the roof, you'll see a massive flow of funds out of currencies, but also financial instruments denominated in those currencies, like bonds. And in the American context, the reason why Washington has so much political power, not only just Congress and the White House, but the intelligence services, the FBI, in terms of the U.S. military, it's being financed by a monetary system, and obviously it's all about trying to keep people confident in that system. And obviously rising gold and silver prices, it signals there's a problem with that system. So that's the name of the game. And I just did an interview with Beyond Mystic with John Claude, and Andy Sheckman was on the interview, and I basically said that some people have called that this shortage in the market a silver crisis in the making. I think it's a point of liberation, because we're able to if the sort of gold and silver price were to go free, it's not just about gold and silver. It's just not about financial wealth and financial protection. It's also a huge sea change in the financing of the current global political structure. And if that were to collapse, well, humanity around the world would have a chance to reconstruct a new class of politicians and political structures that could actually take humanity in a whole different direction. So I think that's the real story about silver in particular. And the reason why I think silver is more important than gold is because the shortages and the manipulation is more extreme in silver relative to gold. And so that's what I think it's all about. It's really about stopping the financing of a global political structure that's taking humanity in the wrong direction. And we have the opportunity to just not protect ourselves on an individual basis, but to reconstitute humanity and obviously ensure that the 21st century is bright for ourselves and for our children and grandchildren.
Yeah. I'll get to the precious metals here in a moment, but I wanted to go back to the macro argument and the macro picture for a second. A lot of people have said, and I'm one of them, that 2008, 2009 was really just sort of a tune-up. It was a bailout, but we haven't gotten to the big collapse. And I wrote a book in 2009 talking about, we still need to have this big collapse, the big reset, whatever you want to call it, before we're going to get into another system. Do you think at this point in 2021, we're closer to that end game, to where we get to what you said, where we have a chance to reestablish our political systems, our monetary systems, and bring more freedom back into our governments and our political systems?
The thing is that the key question is, Rob, when you use the word collapse, I mean, what type of collapse are you talking about? Because
Mhm.
you effectively have two types of collapses that are on the table. So the deflationists like Harry Dent, I mean, their version of collapse is a collapse of the debt bubble, and what that means is that debt is going to shrink. And how does it shrink? It shrinks through defaults. And when you have defaults of a systemic nature, then these globally systemically important banks go. You get contagion, and the whole financial system, I mean, it goes into freeze. And by that happening, basically the share market will fall 80-90%, real estate will collapse 80%, banks will go bust. The bond market will basically collapse, and it will shrink. So that's the one version of collapse. The other version of collapse is a collapse of the currencies, and that is by basically ever more printing of money. And to be honest, I think I'm more persuaded by the inflationists,
Mhm.
people like Peter Schiff, who keep on basically saying that the world's going to wake up to a monetary system that is just rotten, and people are going to wake up that there's basically little value to hold US dollars or Australian dollars or euros, or yen, or the assets that are denominated in those products, in those currencies, including bonds. So I think so I'm interested in your definition of collapse, but I think the collapse we are going to see is a collapse of the currencies.
Mhm.
And that's why, I mean, a few years ago I basically had what I would call a relatively balanced portfolio allocation. So I mean, I had a clean balance sheet, like in terms of debt, but I had some allocation that would work well in a deflation point of view, and I had some assets that would work in an inflation point of view. And I've really now shifted a lot of my portfolio to protecting myself against inflation, because it comes down to what I said before. Is there a limitation to executive government power and to central bank power, or are they a law unto themselves? And can they just continue to inflate this debt bubble up until the point we have hyperinflation, and people, the ordinary person on the street, has lost confidence in the monetary system, in the currency, but also in their own political structure.
Yeah. From those options, I think what's going to happen is we're going to have deflationary pressures. And I think the central banks are going to try to print their way out of it. I don't think they want a deflationary debt collapse. So I think they'll try to print their way out of it. We'll get hyperinflation when there's a crisis of confidence in the currencies and people dump them, much like Weimar Germany or Zimbabwe or Argentina, even, for example. On our show, we've had Fernando Aguirre from Argentina a couple of times talking about the situation with the Argentinian peso when it had its problems back in 2000. He was living there and he lived through that. So I suspect that's what all the central banks are going to do. And I agree with you. I think that'll be the death of the currencies. So then my next question for you would be, do we go back to gold and silver, or what do you think the monetary system is going to look like at that point?
Well, what we know through 5,000 years of history is that we do go back to gold and silver. I mean, that has been the typical human response, because that's all we know in terms of something that's scarce and that's valuable, and that has worked well. So there's obviously an attempt to not to take us back to gold and silver, but to take us into something else. And um, I mean, so obviously, because they can't openly say what their intentions are, I mean, that invites the speculation and conspiracy theory analysis. But some people have said that the end game is these central bank digital currencies,
Mhm.
and that these currencies are basically going to implement some sort of social credit score system like they do in China, and that's how they're going to maintain not only control of the financial system, but they're going to control over the economic activities of individual agents across various countries. So now, and some people do make the claim, and I'm interested in your thoughts about this, is that cryptocurrencies was effectively a psychological warfare operation to make us used to the notion of cryptocurrencies, digital tokens, so that when they wanted to implement the new monetary system, which is not gold and silver, but a central bank digital token system, we would be more accepting of that system, because we've been accustomed for more than a decade with cryptocurrencies. And obviously, cryptocurrencies first came out with the obviously Bitcoin after the GFC. So I think there's a natural human response as to where we want to go and where we've gone in the past. I think the powers that be, in order to maintain political power, they want to take us in a different direction. And that, I think, is the essence of this whole populist movement that's around the world. So the populist movement has manifested itself in various forms, whether it's about anti-COVID-19 or mandatory vaccination or lockdowns, or even in the context of Epstein and pedophilia, etc. But in the economic sphere, it really is about, well, what is the new monetary system? Is it something that that they'll allow us to be free, and that will have stable economic conditions, or will it actually be more control by the existing power structure? And I think that's the big. I think that's the big question. I think there is an intention to move us in a particular direction, but whether they're going to be ultimately successful once once the masses wake up to that, it's an open question as to where we're going to go. I'm a big believer in free will and human agency, and I think the future is not written, and we'll have to see how that question plays out over the next couple of years.
Yeah, I think I pretty much agree with you. I've been saying similar to what you're saying. I do think the powers that be know that it's the end of the paper system. They want to move us to the central bank digital currencies, whatever you call them. I do agree with you that we are being conditioned or programmed, if you want. Go back to Walt Disney saying that television programming, the reason they called it programming was to program people into the way that they wanted them to act, the way they want society to go. And I think the digital currencies are a way to program people into accepting a digital dollar, a digital euro, a digital yuan. China's stated publicly, their officials have stated publicly that they're already moving into the digital yuan. The European Union has copyrighted the term the digital euro. The Fed has come out and supported digital currencies. I think it's obvious that's the way that the power structure wants to go. And I think they're facilitating that. And when they're ready to do that, that's when they're going to let the fiat system eventually collapse. That's my personal thoughts on that. I do agree with you that it's up to us to make the choice because we outnumber them. And the secret here is that we really have all the power as long as we realize we have the power to say, this is what we want. And we're not going to allow our elected officials to sort of take over and drive our money system and drive our culture and our political options. And it really is just going to be up to education, I think, of people to let them know what's going on. If you look at Bitcoin, for example, the NSA back in the 90s, they asked this question on an MIT bulletin board, and they asked it on a legal bulletin board. And I've actually researched these links. I'll try to publish them here for this article. They asked about digital currencies, and they asked about wallet and digital coins. This is back in the 90s. This is 15 or so years before Satoshi, whoever that is, came out with Bitcoin. So the NSA was involved in thinking about digital currencies a decade and a half before Bitcoin came out. Now, were they involved in actually designing Bitcoin? I don't know, but they certainly had an interest in that. And when it finally came out in the public sphere, I think the governments have grasped it. And I think they do want people to feel as though Bitcoin and Tether and all these things have value. So I agree with you. I agree with you pretty much 100% there. I think we're along the same lines. So I guess my question for you is, are we past the point of no return there where we think that they're going to have the power to implement that system? Or do you think that we still have that choice as humanity to say, hey, this is not what we want?
Yeah. So, I probably do think that we still have the power. And I'll probably make a couple points. The first one is about social conditioning. CNBC, it's a very good gauge. What are they pushing and what they discuss? They push Bitcoin and they won't discuss gold and silver. And that, I think, is very, very obvious as to where they want people to take. So, I mean, it has taken me a while to get a feel for, not just here in Australia, but also in terms of the American landscape, who are the real truth tellers and who's actually trying to misdirect people. And CNBC is obviously an organization, particularly when it comes to stocks, that they push shares, or they push companies that Wall Street banks want to sell. and they push those companies onto retail investors. So if a JP Morgan has a position and they want to liquidate it and they need sellers, well, CBC goes tell the customers this is a great company to invest in, and the investors will come in and buy, and JP Morgan will sell, and that's how they sort of do business. So obviously, and one of the big controversies in the Bitcoin conversation has been Peter Schiff. So obviously, he and Max Kaiser have gone on multiple rounds about this whole question of Bitcoin versus gold. And Max is not anti-gold or anti-silver, but he is hugely pro-Bitcoin. And I remember listening to Peter on one of his podcasts, and he said, well, the fact that the CNBC pushes Bitcoin so heavily, that should be a big tell in terms of what the power structure wants you to put your money in. So I think that's a big point. The other thing I will say is about, do we have the power? Now, here's where we get into the whole gold and silver conversation, because look, I've been listening to you quite a bit, and Chris Marcus and David Morgan and Craig Kempke and all of these sort of regular people in America and North Canada, America and Canada, about the gold and silver market and COMEX and manipulation, and what's it going to take for the price to peak in terms of silver above $30 an ounce, and that's what I think the current ceiling is. There has been chatter that we need, in terms of a whale. And I remember, I did an interview the other day with Big Swee, and I've listened to Big for about 6 years, and he's been talking about the Warren Buffetts or the Elon Musk or the Apple or the Samsung, someone with deep pockets who can place extraordinary pressure on COMEX by standing for delivery with a huge number of ounces that the bullion banks can't cover, and that's how the price is going to surge. The point that I think I've been trying to make on this whole synthetic silver situation, and we'll get into this in a second, is that if you look at all the synthetic products in the world and you count them up, we're talking billions of dollars. So if every retail investor in the world who has a synthetic position, unallocated, pool allocated, or an ETF, particularly if it's managed by JP Morgan, if they switch to physical, that is the whale. So we are the whale. We have the power to change the monetary system. But to be honest, it's really come to a head in the last 3 weeks, in particular, I think, with this whole Perth Mint crisis. And I think, I've been flooding the YouTube airwaves and Twitter and Telegram and trying to spread the message about these things, and not just now about Perth Mint, but we're getting stories out of the UK in terms of the UK Mint not being able to supply silver bars, and Bullion by Post, the largest online dealership, running out of coins, and problems at Kitco. And Kitco is one of the biggest suppliers of these synthetic products in the North American market. So I think I did a recent interview a couple of days ago with Craig Kempke on Palisade Gold Radio, and I said to Tom Boderick, the title of the show which he went with is a silver revolution is now sweeping the world. And the revolution is once when you have synthetic or retail investors with a synthetic product, once they go to physical, they're never gone back to synthetic because they're awake to what's going on. And so what we're seeing is particularly in Australia, and I think it's catching on in North America and Europe as well, but particularly in Australia, we are seeing a stampede of Australian investors who are moving out of these synthetic products into physical, and we're seeing what I call a permanent structural change to the market. Because at least I'm doing a bit of accounting. In the last 4 weeks, I've taken 20, just me alone, by this little campaign that I've been running. I've taken 20 tons of physical silver off the market, and that's 20 tons that London and New York can't access, and obviously that's going to exacerbate the shortage. So as this message continues to in terms of come forward, and just an example, I had a client. So yeah, I think we may have cut at the beginning. So I do have my own website, adamseconomics.com, but I also, for the last 3 years, have been working for an Australian bullion dealership, as good as Gold Australia. I'm their chief economist. So I do have I am in the industry. I had someone call me up yesterday with a synthetic position at the Perth Mint of 50,000 ounces in silver between unallocated and pool allocated, and he wants now physical. Well, I'm getting these large clients on a regular basis coming through, and once you start to add up all these ounces, it starts to come to a very significant amount of tonnage and obviously if that starts to manifest itself across the world, well, yeah, we can squeeze the physical market from the bottom up as opposed to waiting for the big whale to come from top down. And that I think is going back to your original question, that does give us the power to overcome the system. But it's all about in the 21st century the ability to communicate accurate information that people find credible, and then people act on that information. And so far, that's been happening over the last 2.5, 3 weeks in the context of this Perth Mint crisis. And I think it's going to continue moving forward. Although I should say, separate to that, we are seeing at COMEX a lot of pressure. Like since the SilverSqueeze movement, we've seen a lot of pressure right across the physical supply chain, where the retail market, the wholesale premiums on wholesale bars, SLV in the ETFs changing their prospectus in terms of lease rates, in terms of London, in terms of being able to source and borrow gold or silver. And then obviously with COMEX, the warehouse delivery numbers peaked on 2nd of February at 399.7 million ounces. In about 8 weeks, we've seen 30 million ounces leave the vaults. Well, I think May, we could see the biggest delivery month in the history of the market. It's going to be either the second largest or the largest. And when you have that sort of pressure at COMEX, at the same time, you're seeing the retail part of the market from the bottom up being drained by a conversion of synthetic to physical. I think we're reaching the near end, and whether it's going to be May or whether it's going to be the July contract, I think we're going to penetrate the $30 ceiling in the next few months, and from there, who knows how high the price is going to go, but I think we're very close to trying to get through this current price ceiling.
Yeah, that's sort of the scuttlebutt I've been hearing from people in the industry. Is they think we're close. They think May. I've heard people say June. Maybe the aftermath of May. And it seems as though that seems to be a consensus. And as long as I've been in this the last 12 years, I haven't really seen so many people feel as though we're right there. And I think that really sort of occurred for a lot of people that I speak to at the end of January, when you had the SilverSqueeze movement and you had, all that silver start to come off. I saw it last July, when I started talking a lot more about the COMEX on July 14th, because we saw, the EFPs. You and I talked about this, I think earlier today or yesterday. The EFPs, you saw JP Morgan dump 30 million ounces of silver, into the registered category. You saw a lot of signs that there were stress, but it didn't seem as though people, the greater amount of people really caught on until January. And then something happened in January where you had the short squeeze movement, you had a lot of excitement. And a lot of people in the industry now are looking at this saying, is this finally the day we've been waiting for years and years, and some people decades? So I agree with you. I think we could be pretty close. And if we hit another 80 million ounce silver delivery, 90 million ounces in May, that could be it. Do you think if let's say we deliver 90 million ounces in May or 100 million ounces, what do you think happens to the COMEX at that point? What do you think the next steps are?
The thing is that, what I would say, Rob, is what happened in July. So, the first 2 weeks, the price did nothing in July 2020. And then in order to get enough silver to meet delivery, the price ran 60%, from $17.95 all the way up to $29. And that was by the end of the first week of August. So, some people think that the COMEX will collapse and they will default. That's a possibility. Or the other possibility is that they, in order to keep the integrity of the market together, they will let the price run. And then there'll be a question of bank insolvency, because even Ted Butler has said that the shorts are so concentrated, whether it's the big four or the big eight, if the price does run significantly, the losses will be colossal. Ted Butler and others think that the losses will be so great that the banks won't be able to be financially solvent. Now, at that point, do the central banks let them collapse, or do they basically just print more fiat currency and try to bail out their obligations in fiat? Now, they could. Will that work? Obviously, if there's a crisis of confidence in the American dollar, maybe the bank's counterparties won't accept fiat currencies that are printed by the U.S. Federal Reserve, and maybe people will say, well, if you're a counterparty to one of these, in terms of some of these GSIBs, these globally systemically important banks, people may require payment of obligations in terms of something else. So that could be a very fascinating thing. So so the price could run, and the bullion banks could get into trouble. And whether they can be bailed out and whether they can survive, that's going to be a very interesting question. Obviously, I don't think they're out of tricks. I think there'll be some tricks that they're going to roll out in terms of COMEX, margin requirements, whether they're going to be so bold as to what they did with the Hunt brothers and stop people buying a COMEX, which they did in 1980. And they obviously did it with Robinhood, with the GameStop in January. If they do that, Rob, I'm not sure, to be honest, how much understanding Americans have about how people outside of America view Americans. I think growing up, like a lot of people, particularly pre 1989, America was held in very high regard because the beacon of the free world, and America has a very rich history of promoting freedom and liberty and justice, going back to the American Revolution. But I do have to say that I think in the last, particularly under the Trump administration, and when you look at the behavior of Congress, if you look at the behavior of law enforcement, intelligence services, the American media, people around the world have lost complete confidence in America. It is true that since 1974, the price of gold and silver has been set in New York. If they try some funny games in May or July or June to protect American interests on Wall Street, I do think other elements of the global market will say, why are we using COMEX? We're not going to use COMEX anymore. We're going to actually set up a new exchange, and we're going to move trading to somewhere else. So I think from a geopolitical point of view, the United States is playing a very dangerous game if they try to play funny business and stop the price from going up when there's extraordinary pressure. They could get away with that in 1980 when they did it with the Hunt brothers, but now with globalization, we have a much more integrated global system. There's huge now. Obviously, the developing world around the world is much more richer. They have more influence. They have more freedom to set up their own markets and their own exchanges separate from the United States, and that freedom probably wasn't there when the Soviet Union was roaming around in the 1980s. So it could well be that if they overplay their hand, one thing I will credit, for example, Jim Rickards is that Jim Rickards about maybe 5-10 years ago was warning about the SWIFT system and basically said that if Americans continue to use the SWIFT system for sanctions, it's going to push a whole host of other countries to not use that SWIFT system and to set up some sort of alternative payment systems. And that's what's happened in the payment system. The Chinese, the Russians, but also the Germans have said, well, we don't want to use SWIFT because the Americans use SWIFT for political purposes as opposed to just managing payment flows in the financial system. So I could think it could be so. It could be the death of the COMEX, and financial and political interests outside of America says we're done with New York, we're done with the COMEX, we're done with the CFTC. It's time to move on to something new. So and to be honest, I'm not sure whether Americans and American regulators and Congress fully understand that, because when I look at America, say in the 1980s and 1990s. There was, I think, a conscious effort by American politicians, both in the White House and Congress, to appear to be credible. But I think if you look at the last 4 years, Schumer and Pelosi and McConnell and some of these other people in AOC, they behave in such a reckless and embarrassing manner that I don't think they care about how people outside of America perceive American politicians, and that I think is very problematic for the United States. I think confidence in your institutions have collapsed because your institutions and the people inside those institutions haven't sort of kept up with the reputation, the prestige that America has held in previous decades, and that's going to have an impact about the future of the COMEX.
Yeah, so almost sounds like what you're describing is the fiat system, the precious metal, the Western dominated precious metal system, the political, the cultural systems could all be at the point in the Western world of collapsing at some point altogether. So there, it seems as though you're saying they're all sort of tied together.
Yeah. The thing is, yes. So yeah. I mean, look, you're correct. I am saying they're tied together, but I think the reason why it's significant for the United States is because the United States still controls these commodity markets through these exchanges, which are set up through Chicago and through New York. And so, if they continue to overplay their hand like they did with SWIFT, other countries are going to say it's time to move on. And I'm not sure that Americans are fully cognizant of international perceptions of their behavior and what the implications may mean for future commodity exchanges going forward.
Yeah, I agree with you. That's a really good point. I wanted to get a little bit into your recent research in terms of these unallocated pooled accounts versus allocated. I know you've done a lot over Twitter and you've talked about this a lot. Can you just give us the latest on what's going on there with these unallocated markets?
Sure. So I mean, my journey on this synthetic story, Rob, probably happened last year. I mean, I've been in the industry, as I said, for almost 3 years, and so I talk to retail investors, so every week I'm talking to them. Now, the dealership I work for, well, I mean, it's a conscious decision from the ownership down. We don't we don't believe in synthetic products. We have a strong philosophical belief in physical ownership. And so for us, we only deal in physical metal. So if you want something, so as we've had some customers from time to time call us up and say, do you have an unallocated program or a full allocated program? And we say, well, we don't offer that product to the market. We don't believe in it. If that's what you're looking for, you've got to go elsewhere. I mean, all we will sell you is metal. And if we don't have metal, we basically will not sell anything to the market. And so, as I've had this conversation about the different types of products in the Australian market, I've come to learn that a lot of Australians have poured millions and millions of dollars into unallocated, pool allocated products. And we have two big entities in Australia. The Perth Mint is one, and they're government owned. And the largest private sector bullion dealership in Australia is called ABC Bullion, and they have a pool allocated program. And as I've continued to research these products and talk to investors across Australia, I came to the realization that people didn't understand the difference between physical legal ownership and obviously when you have either direct ownership of, for example, holding a kilo of silver in your hand, or actually having a custodian look after that, like putting it in a private vault. I mean, that is when you legally own something, as opposed to having a promissory note in unallocated, pool allocated, or some of these ETFs. And then with an ETF, you own a unit of a trust. You don't actually physically or legally own any specific bar or coin. And that key counterparty risk question, most Australians who are invested in the synthetic products didn't understand what the differences are. I mean, one is they were attracted to the claims by the Perth Mint, for example, that it was one-to-one backed. They were also sort of assured by the fact that the Perth Mint is guaranteed by the Western Australian government, but also because it is a government institution, and Australians are more trusting of government than compared to Americans. But the Perth Mint website said that it's these products are backed one-to-one, and those I think are the key factors. Plus the fact that there are low, there's no storage, so there's no insurance, and the transaction spreads in and out of these products are much cheaper than actually getting into the physical market. I think these are the things that have lured a lot of customers into these products, and that's why I wrote an article on my website. It's called "Beware of Gold and Silver Synthetic Product." Beware of gold and silver synthetic products, and that was really to just warn people about what the differences are. And I had a couple of thousand people read it last year, and a number of people decided to make the switch. And it was in very sort of small numbers back then. But then since the SilverSqueeze movement, it's really come to a point of crisis. In late February, I had friends in Perth walking into the Perth Mint looking to buy silver, and there was no silver for sale. starting in March. So as good as gold, we are an accredited distributor for the Perth Mint, and it wasn't just us, but retailers across the Australian market, wholesalers as well. We're told there is no silver for the Australian market to be sold out of the Perth Mint. Then I started doing a number of shows and writing some articles about trying to again highlight this issue about these synthetic programs, and then I started to get all sorts of particular stories of people trying to get either or silver from a new order, and people saying it's 4 months to get, like for example, 20 kilos of silver, or specific people calling up saying I want to convert my synthetic position to physical, and I think part of that those sort of initial approaches in early March, late February, was because of YouTube and the alternative media saying there's a shortage of physical silver. So I think some people were thinking, okay, I want to now move to these. I want to now move to physical, and then I did. I think a very influential show with Dunning and Kaiser and Liberty Finance that got a lot of Australians thinking about it, and I've done some shows with Martin North on my own YouTube channel in the interest of people. And then what happened was on the so I picked up a number of stories that people were feeding me through, and then on the 20th of March I put out a tweet, and to be honest, I've had some problems with Twitter over the last few months, and I thought I thought maybe, I don't know, 100, 200 people would read it, and I said that I'm hearing horror story after horror story involving the Perth Mint. People with synthetic products can't convert to physical, and I said the Perth Mint is in default. And lo and behold, within 2 weeks, 369,000 people saw that tweet, and Wall Street Silver posted on Reddit, and David Morgan and Alison McLeod and Craig Hemke and a whole bunch of other sort of senior people in the industry retweeted my tweet, and like the whole explosion started from that tweet. And since then, I've just had a flood of people approach me with their stories across the Australian market, and I've been sort of reporting that in real time. And 2 weeks ago, I did, I think, 5 interviews where I was able to go into some detail, and there was a really influential program I think I did with David Morgan on Palisade Gold Radio, and we've also had maybe 100,000 views on that. And then in the modern age, a rumor will spread like wildfire, and it's really sort of caught a light. And there's been an absolute stampede in the last 3 weeks in the Australian market out of synthetic into physical, and people are just, the phones are ringing off the hook. And I've got friends at some of the private dealerships who offer these synthetic products, and they just said the number of customers who have heard me on with Chris Marcus or with David Morgan, with Tom Bodrovic, or Dunnigan Kaiser, or with Craig Hemke with TF Measures Report. That was one of the ones I did 2 weeks ago, or my show with Martin North, and then other people started to talk about this issue independent of me. That's where Australians get their information about gold and silver, and that's what started the snowballing in the week of the, say, 22nd to 26th. And then on that week, and that's when the interview with David Morgan that I did was released. And then by the Monday before Good Friday, that 4-day period, there was a stampede, and I was hearing that the number of interest and calls to get out of this just exploded. Then we had the long weekend, and now we're in the week we're in the week after Easter, and that momentum hasn't stopped. And there were just people calling because we're doing these interviews, we're doing the tweets, and my Twitter account. I've had 5.5 million impressions in 3 weeks. I've never had that before in my life, and so it's just captured the imagination of investors, and we're seeing a stampede. And obviously, I've publicly said the Perth Mint is running a fractional reserve synthetic program, and they're using leasing arrangements from, for example, the Reserve Bank of Australia, in order to cover their claim of 100% backing. And that's why I think they're running into problems being able to help their clients go from either unallocated or pool allocated to allocated. And now we're seeing all sorts of other examples of shortages. And obviously, I heard in the last couple of weeks that Kitco is one of the biggest provider of synthetic product. And obviously, I know that I saw your interview before we started recording, what you did with James Anderson, and you had one of my tweets up there of someone who had a conversation with Kitco, and then I published. Then I had that same person come back with a more detailed statement about how, according to him, a Kitco employee admitted that these products were not 100% backed, and so I basically said it's official. They admit it's a fractional reserve, and obviously when you have like a bank run, you don't want to be last in line because you get nothing in terms of redemptions, either cash or metal. And so we're off to the races, and so yeah. So as we go forward, I think we're going to see hundreds of millions of dollars go from synthetic to physical. Like I said, this is a permanent structural change to the silver market. They're never going to go back to synthetic, and that's obviously going to have downstream effects in late April, early May, when COMEX is desperate for silver to settle contracts in the May contract, and yeah, like I think we're going to see some fireworks very, very soon.
I agree with you. A lot there, a lot you shared so far in the program. You're just packed full of information. I really love that. I think our viewers are going to love this conversation because you've given so much information. And like you said, your coverage of these unallocated accounts is really blown up all over Twitter and all over, the YouTube verse as well. And it's good to see that getting a lot of attention. I think you've been instrumental in bringing light to that and helping people get rightly position the precious metals, not in the unallocated, but getting the real physical. Wanted to leave the last one open for you. Anything else that you want to talk about for our viewers? Last messages that you want to give?
Yeah, so probably I would want to sort of try to make a couple of comments. The first thing is, because a lot of there's been definitely in the last 2 or 3 years, and I'm sure you've picked this up with your own customers, with your firm, Rob, is there's a lot of new entrants into the market, and they don't understand how this game is actually played. So the silver market, the gold market, it's not a price on a screen coming out of New York with the COMEX. We're talking about a globally integrated network of banks, bullion banks, central banks, governments, intelligence services, military, media, and I call it an international syndicate. And that syndicate is working in concert in a coordinated fashion to keep this price suppression scheme going. And so that's why Craig Kemke, who has studied this syndicate for a decade, that's why he could write on the 2nd of February and say that the first crisis will be not in New York or London, it'll be Perth, Zurich, or Montreal. And obviously Perth was the first area. So there's a lot of people, and even some of my own clients, that they sort of, particularly with because obviously you're talking about shortages in the market, Andy Sheckman's talking about shortages in the market, and other people, and I'm talking about the same thing as well. And yet the price at COMEX is falling, and people going, well, I get questions all the time. Why is the price going down if there is such demand for silver? And the key point is that that's all the evidence you need that the price is suppressed. So the key point is, if you want to actually understand this market and where the market's going, do not look at the price chart. It's completely irrelevant. The most important thing to my mind is, obviously, if you can find examples across the supply chain of points of stress, try to look for those points and obviously keep a track of those. But I think if you're looking at anything to do with COMEX, you must keep on looking at the warehouse data and just keep on tracking how much ounces are leaving the vaults. Now, you and I think in an off-camera conversation, we both questioned the integrity of that data, and we really don't, particularly the eligible categories. So we really don't know how much real silver COMEX has, but the data they are publishing is suggesting that silver is leaving the vaults, and obviously gold, and I should say that gold is also leaving the vaults as well. And that's probably the most important thing to track. So there will be a point that as silver and gold is drained out of the market, they won't have enough to cover these contracts, and that's when the fun and games will begin with the price. And so up until that point, there's no need or no utility in looking at the price chart. You just need to keep on tracking evidence of movement of physical ounces. And yeah, and be honest, Rob, I mean, for the average person who has a full-time job and perhaps raising a family and wants to live their own life, they don't have the time to track this stuff. But you and I do it 24/7, and so that's how we can get a good feel for what's happening in the physical market. But for a lot of people, they just don't have the time to do that. But for those who do have the time, or who do want to get into this to a more technical degree, don't study the electronic market, study the physical market, and that should give you the best clues as to where the market's going, and when will that point of price liberation will occur.
So, John, if people want to reach out to you, get more information, how can they find you? What's the best way?
Sure. Okay, so on Twitter, my handle is Adams Economics, and that's where I've been putting a number of these tweets about information that I'm getting. Some people prefer platforms like Telegram, so I do have a Telegram group, Adams Economics. People can reach me there. I am on Facebook. I have a Facebook group, Adams Economics. People can reach me there as well. LinkedIn there. I have a website, Adams Economics. People can go read my body of work, which is freely available for people to read. My email address is john at Adams Economics. So if anyone wants to ask any questions, or if you're looking to purchase gold and silver or anything like that, or storage, I'm happy to help you there. The main YouTube channel that I do here in Australia is called In the Interest of the People, and we cover a whole host of things from economics. We've done a number of shows about silver over the last few over the last couple of months since the SilverSqueeze movement has started. So people can come and listen to Martin North and I talk about a range of topics there. I'm pretty sure they're the sort of main avenues that people can reach me. Hopefully, Rob, I've enjoyed this conversation. Hopefully we can do it again soon, and we can cover more ground.
Absolutely. I'd love to have you back on the program. I think you do great research. I've definitely been following you for a long time, and I'm excited to interview you because I've wanted to do it for a long time. Appreciate you coming on the program. We'll definitely have you back.
Fantastic. Thank you for having me.
Thank you so much, John. I appreciate the conversation.